Let me record. All right, so your question was, there's many different possibilities, like futures, options, spreads and whatnot.
Like the ES and MES and the minis, and it's just kind of trying to figure out, like, just seeing like the /ES or MES and what that has to do with.
Yeah, I'll do a few quick numbers based on what I remember. These are easily Googleable, by the way. But when you're looking at a futures contract for the MES or the ES, those are tied to the SPY or S&P 500 fund. So when you're looking at selling an option on MES, you're very close to selling similar to an SPY option. I don't remember the top of my head what the amounts are. Let me think. It's a 5 multiplier. Yeah, if anyone else in the chat remembers, but I forgot. It's about 50 share equivalent of SPY, but I'm probably wrong on that, so don't quote me on that one. But if you're selling an option on MES, essentially whatever strike price you're selling it at, if you get assigned on that strike price, theoretically the notional value will be that times 5. So let's say you sold a 3,700 put and you get assigned, 3,700 times 5 would be the notional value. But what's good is you don't actually have to use up all those funds. You could get significantly less funds in order to make the trades. They are very highly leveraged, but we're doing trades that are relatively safe, and we're able to get out, good profits in those cases. Obviously, we could work on stop losses and whatnot in order to try to mitigate our risk there. If you look at an ES option, ESs are a lot bigger than MES. It's a 50 multiplier. So it's close to the equivalent of an SPX option over SPY. You probably don't want to touch ES until you have a pretty large account. And that's, I would say, minimum $30,000, which I'm pretty close to that amount in my futures account right now. So I might eventually start doing ES options, but MES options are still perfectly fine for now. Well, welcome everyone else that's come in. We have quite a few that just joined. One more just joined as well. Just leaving it open for random Q&As, so feel free to join in as you need.
So Lance, you're saying that you might switch to ES, but why not just do more MESs instead of switching to ES?
Good question. There are some pros and cons to both. For ES, it does use up more of your buying power, but it uses less commissions. And commissions can start adding up quite a bit. Like when you're selling an MES option, just selling a put and then buying it back, I can look off the top of my head, it's about $5, $6 in commissions there. So even if you're taking in $30, $35, you're paying $5 in commissions. It's a pretty large percentage of what you're making. For an ES option, essentially times that by 10. So if you're making $350, the EX option itself commissions are a little bit more. It's about $7 or $8 last I checked. And I can look up the exact number shortly, but the pro is commissions as a percent of how much you can make is lower on ES. However, if you have a relatively smaller account, one, ES could hit you really hard on the span margin, and two, MES would possibly be able to get into more positions at better times. So if the market just drops 1% or so every day for like 3-4 days in a row, you could theoretically just sell an MES the next day and then do, say, 3 of those. But if you sold an ES right away, you may not be able to just sell another ES the next day. So you could spread out when you're actually entering these positions. Yeah, there's pros and cons to everything, obviously, but usually
also in ES, you'd be able to get significantly further away for probably the same MES, wouldn't you think?
It's pretty much a 10-to-1 ratio for pretty much every case there. So if you sell, let's say, a 0.05 delta MES and a 0.05 delta ES, same days out, it's about 10 times more buying power anyway for the ES. So it really doesn't make much of a difference there.
Thanks.
No problem. Got quite a few more coming in. Welcome everybody. Just leaving it for live open Q&A. So feel free to leave a question when you have one. You can also type it on the chat if you'd like.
Hey Lance, can you talk a little bit about the 1-1-1 trades you've been doing and the 1-1-2 trades? And I understand what it is, but I can you get a little into like why you would do the debit spread over the naked put? Like what's kind of the rationale behind that?
But do you guys see my thinkorswim screen over here? I think I can just nod yes or say yes.
Got it.
Yeah, I can see it.
Okay, so let's just compare just selling a basic naked put, or even say two naked puts. I like to go a little further out in time on these. And that could be a separate question later. But let's say I'm selling around a 0.07 delta. I'll sell two of those. Your buying power here is about $700. If you end up buying a debit spread on top of it, that is the first two ones in the 1-1-2. It would be less than that. I can't actually show it on the screen because I can't put all three orders in at once. But I will show you what it would look like on the Analyze tab. Typically on a 1-1-2 or 1-1-1, we're buying pretty close to around a 0.25 delta. So I'm going to buy the 40-50 put here, and then I'm going to sell usually a 50 with, so 4,000. And this is the 1-1-2. If you look at the Analyze tab, you could see that if the market stays where it is or goes even higher, you're still positive. This little dash line here is a 0 point. So you're still taking in, it says $137 right here, if the market pretty much stays where it is. And if you got a naked put, it would be a little bit higher because you're buying that put debit spread. However, the put debit spread usually is only about a 8 to 10 debit, and it's a 5 multiplier. So you're looking at $40, $50 for the debit part. This nice little bump up here is what happens when you're inside that 1-1 debit spread. So you're getting a lot more of a possible gain here. And it's a pretty wide range of values. So from about 35, 50 or so, all the way to 4,000, you would be making $387. So you're almost tripling your possible profit if it hits that possible zone here. So the two reasons why I like it is, one, you could possibly get a bigger profit, and two, you could also cushion that buying power a bit because you're buying that put debit spread as you're, let's say the market's starting to go against you a little bit, your span margin will not increase as much than if you just sold two, say, naked puts. Does that make sense?
Yeah, perfect. Thank you.
Is there any more? I don't know if I answered every part of your question. If you want to elaborate a little more on it.
Also, if you take those short puts off, it can be a little hedge left. I know you've
Yes.
mentioned that in the past. Yeah.
Yeah, what's good in some of these, like if you're able to take in about a 20 credit on these naked puts, and let's say the debit was 10. What I've done in the past was when this decays at 50% or so, you could buy it back for 10. So you sold a 20, you bought a 10, but you did two of them. So you really made 10 times two contracts. You really made 20 times the 5 multiplier. So you would make $100 by getting rid of these two naked puts. It did cost you 50 to buy this part. So 100 minus 50, you still made $50 no matter what. You could get out of any more risk by removing those naked puts, and you might possibly make this extra bonus. It's essentially a free hedge at that point if you're able to close your naked puts. And that's what a lot of people will do. Like they just constantly get rid of those naked puts, and they have a lot of hedges on that are free. It's pretty neat. They don't always work. Sometimes, quite a bit of the time, those put debit spreads won't even make anything. But at least it's there in case you have a downfall, and you could get pretty sizable profits from it. Good point, Charlie. 5 questions. Ask as you have them.
So
This is-
Lance,
Go ahead.
if you want to, I don't know, really one thing we could do is we could look at my recent portfolio, and it'd be awesome. I was going to ask you privately whether we could go through it and kind of talk it through, but maybe there'd be some advantages to people in here doing that too. So I didn't want to dominate the conversation.
If there's no other questions, we could do that. Let's
Exactly, yeah. So if it goes too quiet or people just want to do that, then that's an option for people. It benefit me a lot, but it might benefit other people to kind of go through some real examples that trades that I'm in the future stuff as well. So just keep that in mind if people don't have any other questions.
Russell, you said the word option. Sorry, I had to. Mimi, do you have a question? Any question there? No? Okay. Anyone else? We're wide open here if you want me to go over anything.
I have one. So how do you manage like those trades if there's like a scenario where there was the COVID crash again and price starts dropping like real fast, and you would have to close or do some sort of management to limit the risk or the losses?
Any trade? Or any trade?
What?
Do you mean in the previous question on like this 1-1-2 trade I went over, or just any position?
Kind of, or just like, I guess for entering just a naked
Okay.
short position, I guess.
Yeah, okay. Let's just look at this purple line first. This is for the 1-1-2 trade. I'll do a naked one after. The purple line is the current loss. If you go to this X column, depending on what the strike price is over here. I said Y. The Y column shows the loss, sorry. The X column shows the current price. So MES right now is at about 42 and 4,200 and change. So we're right over here in the line. So if you entered the trade that I just put in, we're pretty much obviously break even because nothing happened yet. But let's say a COVID thing happened and the market goes down 8% tomorrow. The purple line will show how much of the loss you would have for that particular day, for instance. So let's say it dropped 100 points or so. The Y column here is showing negative 135, it's in purple. So you'd be down $130 right away. Definitely wouldn't help. And then if it continues dropping, I'm going to be moving the purple dates up. So every time it's moving here, it's 1 day in the future. So let's say we went about 2 weeks or so, and the market dropped a lot, 10-15%. Then you would be $300-400 loss. At that point, I would probably close out the trade because it's not looking good. If we're already over here, the put debit spread at least is helping a little bit, and I'll compare it to the naked puts shortly. But yeah, I would stop out usually at a 2 or 3x of your premium collected in most cases. Now we're going to add on a naked puts itself around 0.07 or so. I'll just do 1. Let me get rid of the originals. Okay. Analyze. I did something wrong. Something else is still opened. 1 second. All right, so trade, analyze. What's happening? I don't know. It would be just a, oh no, that makes sense. It's just a straight line. This is your total profit at expiration. 81.25 in this case. Once you hit the exact strike price of 35.50 or 35.30, whatever I put, you'd be at break even. And then you're starting to lose money after that. The purple line would be a loss, say 10-15% drop right here, 2 weeks in. You'd be down about $400 or $500, like around here. At that point, I'd probably close it out. What I usually do for managing, especially if I'm doing strangles, is I'm going to be closing out at 2x the premium received in most cases. So if I'm taking in, say, 20 in premium, If it hits 40 in the debit side because the market's against us, I usually just close it out. And then I might re-enter a new one. Depends on if the market's just continuing to drop or not. Does that make sense?
That makes sense. I got it. Thanks.
Yeah, for a lot of them, I will do pretty set stops, especially in a huge drop. It will hurt. Not only will you lose money, but your buying power would go up quite a bit, even if you don't enter new positions. So it's helpful to close positions at a loss just to free up some buying power in the future. Any other quick questions? All right, Russell, maybe you could show your part.
Yeah, I could do a bit in a sec, but one of the things that I do keep coming back to, Lance, is I know with the meme stocks that you do have like a 3x stop out, right, on the premium. That's
Yeah.
usually what you but again with the futures, you don't, is that right? Like you generally wouldn't stop out 3x, or you would?
It depends. If I'm doing those commodities like gold, oil, grain, stuff like that, I do very set stop losses. It's usually the premium collected. So again, if you're taking in $200 and you have to close it out at a $200 loss, that's usually where I get out. And those are pretty
Okay.
mechanically set. Like take your 50% profit or get out at 100% of your loss.
Cool. Yeah, because like so you, as you know, I just started really following your futures trades and I'm loving it. But that's partly because I got in at a good time and the market started to rally nicely. So I'm up 50% on all of that within like a week or two. And so like that's given me a false sense of security probably. And I want to make sure that I know what to do when that's not the case. So that's what I was kind of thinking about sharing, like just sharing my screen with my portfolio and then talking it through with you. Maybe
You
people
want
will
to set
benefit
up your screen while I'll answer another question on the chat. I set it up where it's
Alright.
multiple could share screens, so you should be able to click it.
Alright, I'll
Mimi
do that.
asks, do you ever roll the SPX plays rather than just get stopped out? I've done that in the past and it hasn't seemed to really help much. I like to take each individual trade as either it works or it doesn't and look at it in a probability standpoint. So if you're winning, say 2 out of every 3 trades, 66% win rate, but the losses are, 3x stop losses, you're essentially losing 2x because you took in 1x. You'd be at break even at that point. But if your win rate is 80%, 85%, and it's on the spreadsheet, I did the actual math by hand to see, excuse me, to see what the actual returns are. You can still make a really good return on it. So I like to just treat them as probability cases. If you end up rolling, you probably will roll again, and then you're just waiting it out. And sometimes you might have to roll really far out in time. And then usually it's just better to just get out and then do a new one. When you're closing out a position and entering a new one the next day anyway, it's like a roll. You're just essentially just waiting the day out. It's similar to like day traders when they're having a bad day in day trading. Usually you want to have a certain set amount of money that you're willing to lose. If you happen to lose that much, it's probably good to just stop the rest of the day because there might be some psychological things involved and you don't want to get emotions into it. All right, Russell, you want to describe a little bit about your current positions?
Cool. Can you see the screen?
Yeah.
Okay, cool. So yeah, so guys, so I've been obviously helping out with theta traders for a while, and I've taken a lot of the positions over the last year, usually the CSPs on the meme stocks and things. But Lance convinced me completely to start doing the MES stuff, and honestly, it's been so awesome over the last, I think, 2 or 3 weeks now. I've been doing this, and I love it because it's a learning curve for me, and I've been pretty excited to see. And you can see from here, so I've got a pretty small amount of capital in at the moment. I started with $13,000. So I'm going to expand that up to make a bit more money to try and make a full-time, several $1,000s at least a month from this eventually. But at the moment, I'm just starting getting my feet wet kind of thing in this. And basically, so this is what I've got going on. And so I've been pretty aggressive, I think. And that's, I guess, part of what I have to ask here with Lance is, so I basically went on a buying or selling spree, to be more accurate, right? Where I'm looking just at the end of June here. So I had a bunch of June 16th stuff, so 2 weeks from now. I already closed some of those out when you hit 50%. But I still have this one at the top here, this June 16th, 15 days to expiration. So what I'm trying to figure out is I want to make the most of my buying power and I want to cycle through, but I also don't want to be a crackhead day trader because that's obviously what I do the most of, like buying options. So part of me wants to start closing these out, right? You see this one right here is already 50%, right? So it's a $50 premium. It's already at 33. A lot of these are starting to come blossom basically. So the June 16th is already more than, I mean, it's only $7 off the maximum, but I don't really want to wait like another 2 weeks, right, to close that out. But I guess like that's where my lack of experience comes in, because there's no chance we're getting down to 36.60 on MES in the next 2 weeks. I can't imagine that. So I guess like managing this whole thing is starting to become like a head game for me. So I was hoping that you could kind of walk me through some of the things, Lance. Like, would you close out now on like this guy, or would you just be like, you know what, I don't want to waste that 750 plus commissions and let it expire in 2 weeks and cycle into something else? Or what's your thoughts?
Right, there's not a clear right or wrong answer to these, and I also want to be able to reiterate for other members. I'm aware some people are very busy, they're working on long day jobs and whatnot. Some people have a lot more time to actually manage these trades. So if you do either thing I'm about to say, it's probably okay. I personally leave them on until they expire, because I want to be able to watch it on my end and give advice if someone else was doing the same thing. However, in that particular case with the 15 day left, I would most likely close that out at this point, just because you made $30. The commissions are about $5-6 in the end.
Yeah.
But try clicking on that option right now. You'll see if you close it, you get a lot of your buying power back. So
Right. So they click close positions here and then pops up.
And
Okay, so if I was to just have a look and see what this would close at, so I'd want to buy it back at the lowest possible price, right? So
Sure.
I'm not going to do it, but like
$3, so it won't matter that much. But just click
try
review
like 120.
and see.
So I'd realize this profit, which is awesome if it would close at that.
Look at the
Minus the commissions, which
your buying power goes up $300 almost. That's probably more useful than the actual profit in a way.
more
Because
useful.
you
Yeah.
are cutting a little bit of your profit because you have to pay your commission and the exchange
Right.
fees, which you don't have to pay exchange fees if the option just expires worthless. But if you do close it out, even for that tiny amount of a $6 debit, you do have to pay. We forgot the exact amount. It's about $1.50 to close it.
Yeah. Yeah, we're haggling over small amounts, and that would free up. So that would almost be another position, right? So at the moment, I guess that's another question. Am I overextended at the moment? So it says up here, buying power 10,000, net liquid 13,252. I think you mentioned that you can get this down to what, half of this guy? This 10,000 could be half.
50% would be the max that it would take. So at a $13,000 net liquidating, I'd go about 6,000-7,000 in the buying power.
So I still have a few positions I could take even without freeing up buying power, right? So I could just wait this guy out.
It's like you did start about a month ago, and you've been adding funds in pretty aggressively. So because of that, it's a little bit different. But what most members will have a certain account size, and then they're going to be maybe willing to put in a certain amount each month or each few weeks or whatnot. And that's what I'm personally doing. I try to put at least $1,000 in every month. So in that case, like, you're going to be waiting it out a little bit to enter the new position. The few things that I would recommend at this point, you could enter a few more positions, and you could even enter quite a few more positions if you close, let's say, the 15-day, and then the 36.70 even, you could consider closing it because you're already near half profit. So you would have another almost $1,000 in buying power. So in that case, you could enter a few more positions. I think you're perfectly fine where you are right now. And even adding a couple extra positions the next few days is fine.
Yeah, because that was kind of my thought at the moment, was like, if I had a couple more positions, and if we can get the premium collected up to, say, $500, right? So I think at the moment this would say if everything expired worthless, my 13,000 would then be 4,000 13,465. So my thought was like, let's get this up to 500, right? Because it's pretty nice in a month and a half, $500 on 13,000, doing very little. So if I took a few more positions, got this to 13,500, let them expire by June 30th, then just reset everything, right? So then just sold July 30th, just go again with like as much positions, but with knowing the market roughly hasn't, it's only 30 days. I feel like I can judge the market within 30 days better than 60 days, for example. So that was kind of my thought. Do you think that's a good way to go, or do you think it's better to be buying but selling stuff 2 months out now rather than just having a full reset when these June 30th things like?
I was thinking like you could either sell a little bit further out expirations now, or have a set amount that you're willing to be like willing to trade with your total net liquidating, and then just stagger it in. So every week from now on, enter a new around 30 to 35 day. Because there's going to be a 35 DTE coming out tomorrow that we're going to re-enter.
Yeah.
And you should be fine doing that one. The next, Friday or Sunday, just do the next one. That's another 35 days out. So then you're naturally going to have a few decay and become worthless every week in most cases. And then that frees up your buying power to just enter a new one in for the same amount of DTE.
Cool. And then the last question I really have, obviously other people that are like listening can ask questions about this too. Like, but this 112 is down the bottom here. By the way, guys, if you're not used to Tasty, like Lance is really good at helping organize. I had no idea you could make these organized like this, but this is a 112 down the bottom here. I have no idea how to manage this beast. Like, so I see this put is $153 negative, but we have like this one here is doing well, these two are doing well, so it's overall net $78. To me, that's pretty good given that this is only using $1,200 buying power. Whatever percentage that works out is really nice. Part of me wants to close it, right? Because what's that, 3% or something? I didn't do the math on it, but it's not negligible. But what do you think I should do with this?
With the market going up so fast the last few days, it is fine to close it. I've actually closed one like this about 4 or 5 months ago in the exact same situation. I just closed a different time it was like this, and I closed the naked puts only, but I left the debit spread on. And essentially I left it to break even. Look at the very last column that you're at right there. So you're at a $93 gain if you got rid of your 2 naked puts.
Yep. So this bottom one.
Yep. So the 2 above it is your put debit spread. The one that says 39.50. You paid about $42.50 to do that put debit spread. I just took the 347.50 minus 305 on the trade price.
Interesting. So I could close up that bottom line here, take the $93 profit, free up like $1,000 in buying power, right?
Yeah, and you can leave the debit spread on as a hedge. That's already been paid for because you made more on your naked puts than the hedge cost.
Interesting. So the hedge cost $40 is what you're saying.
Yeah, so you could close at 93 minus the about 42.50. So you're up about $50 anyway. And you would have that 39.50 just waiting the rest of the 78 days. And that could make a pretty good profit. You get $250 if it goes below 3,900.
So somebody who's new to spreads and stuff in general, like what will happen if the market keeps rallying to this guy? So is the put just going to get to 347 minus $347? It gets basically worthless. And this guy will, like, I just don't have a feel yet for how the dynamics work with these. It's probably a super basic question, but like if the market continues just rallying and rallying.
Worthless. Let's say MES goes to like 4,500. In that case, 39.50, 3,900. They're going to both be worthless. So it won't really be worth anything. And then you would have lost the $45 on the debit spread.
Okay. So what's the ideal situation here for this guy? So imagine I do what you're saying here and close out these 2 naked puts and get that nice little gain. And then what's the ideal situation for the hedge though? Like what would be a good, like if the market starts to tank, does that work out better for me? What's kind of the thought process?
So you kept on the hedge at 3,900, 3,950, and the market drops after. That is your best possible scenario.
When it gets between them, right?
Because you would get 50 times the 5 multiplier. Just take your 3,950, subtract the 3,900. That's a 50 difference. and
Okay.
then ends up by 5, you would make $250 in that part of the trade, minus the debit you paid, minus the 42 or so.
Right.
You'd make about
Right.
$210 more if it dropped below 3,900. But
So
you
the,
know,
id- the idea,
so you said ideal situation now,
yeah,
and what it's kind of a loaded question because ideally we're slightly bullish whenever we're doing these trades because then you
Right.
don't have to worry about it and it's just a hedge and it's okay that it's worthless because you made more on the naked puts anyway. So it's kind of a loaded question when you say that.
yeah, and I might be overthinking it because, coming from the buy side type of thing, I'm always looking to kind of time buying and selling and stuff. And I know with theta decay, it's supposed to be kind of, that's the whole point, right? So like for me though, it's like if the market's rallied on this debt ceiling stuff, like it makes sense for me to start taking profits, thinking
Yeah.
there's a possibility we're going to see a strong pullback. And maybe I'm just being too active though. Like maybe I'm still, my day trading crackhead stuff is still instilled in me too much that I shouldn't be.
You're at 50% buying power right now. Like if you would say 6,500 in your buying power and your net liquidity, then I would most likely want to close some of those that are a pretty good profit, just so you free up more buying power. I'm only thinking about in terms of buying power there. Obviously, you could make a little more if you waited, but you do make profit, and it's a good profit in a quick period of time. There's nothing really wrong with that in the end. But since you have a lot of buying power right now, like there's not a real rush to get rid of those, I don't think.
Okay, cool.
Yeah.
All right, I think that's all I've got to ask.
I mean, as you and other traders are starting to look into this stuff, you could decide to take profits early. I might be taking profits slightly earlier than I possibly could, but I just like getting the profits and it's working for me. I'm getting at least a 2% a month that way. I might make a little more if I let them go a little longer, but can't be too mad about it, right?
Right. It's only a few dollars at the end of the day. It's not a lot. So
A lot of what you'll see coming up is how do you maintain your buying power well? Because buying power is really important, as you'll see. It's like you don't want to be stuck in a situation where you used up 50% of your buying power and then the market tanks and suddenly you're using about 75% of your buying power, which could happen if implied volatility increases a lot and if positions get closer to in the money. So then you're kind of stuck. You'll most likely have to close stuff at losses just to get out of positions. And then you'll have to wait a while to re-enter new positions.
yeah.
So that's more of like an art than a science in some cases. General rule, if you're at 50% of your buying power, you shouldn't be taking on new trades. And then if you have using less than 50%, you could probably take on a new trade in a lot of cases. But you would also just be aware that the market could completely tank, and then you might be stuck waiting around a little bit.
Cool,
I have a quick question. Is that a recommendation for just a futures account or for any account that you should keep like basically half your net liquidated value in cash?
Yeah, again, opinionated question. A few years ago, I was willing to use about 95% of my cash in just stock options. So those put credit spreads, I'm willing to use pretty much all of it. Now I'm starting to want to keep a little bit more in cash, but I'm usually around 60 to 70% of my buying power that is actively being used in trades. So I still have about 30-40% that I could enter new ones in. So I kind of changed my thought on that. Like I initially thought it would be good to have as many positions as most likely possible up to you don't want to leave like $10 in your account, but like try to do a lot of positions, have maybe $500 left in cash, and then you have more of your money working for you. But now I'm starting to think you should probably leave a little bit more in cash than that. We have another minute and a half. Do you guys want to continue another Zoom? I can just make another link. If you guys could just say it in the chat, just yes or no. Just so I'm aware. Because I could still talk a little bit more. If we get a few yeses, I'll do another one, so. Got two. Anyone else gonna continue talking? I'm willing to talk until my kids start bugging me. They're good right now, though.
You'd think we could splash for unlimited Zoom, right?
Yeah, I got it. Probably could.
I haven't either. I've been doing Zoom calls and things for years now. I still haven't bought the premium Zoom.
We got three yeses. I'm gonna send another link. And I'll just put it right below the previous one where you entered, okay? If you are leaving now, thanks for joining, and feel free to leave me any messages on Discord, okay? I'm gonna close this one out and then resend the new one in about a minute.